You might have heard, seen, or even experienced that even with today's high interest rates, offer dates, bidding wars, and selling a few $100,000 more than ask are now once again happening in today's market. Now, over the past few months, buying demand has been picking up. Inventory hasn't come up at the same levels, and so this buildup of demand has been creating higher selling prices that don't really actually make sense anymore a lot of times to real estate investors. So, what exactly is going on? Where are we going from this point on? Where do numbers still make sense for Toronto real estate investors? Well, we'll try to hash out all these questions in this video coming right up. But before I go on, check this out. This is a heads up that you can get our complete Toronto real estate investing guide for free on our website. You can see things like a breakdown of typical costs, rents, appreciation, sample financials that you can change up to see how it affects your returns, and even try out a quiz to see what might fit you best. I'll put a link to the free guide in the description below. Don't forget to like this video and subscribe to our channel so you don't miss other content like this made just for real estate investors in Toronto. Take a look at this chart that shows starter freehold prices in Toronto over time. We did see prices shoot up last year in Q1 right before rate hikes and then drop back down equally as quickly over the summer of 2022 by 25%. But ever since Q4, demand has been picking up again, and more recently, this has led to prices rebounding not to exactly peak levels, but definitely higher than where they ended in 2021. As real estate investors, we look at fundamentals, and numbers might still work with cap rates at 5.5% once you factor in appreciation at a conservative 3% per year as well. But now that cap rates are dipping down to closer to 5% or under, we're likely going to be cash flowing negative at current interest rates. So it does get harder to justify buying investment properties with a 5% cap rate, considering that the risk-free government bonds are now at least 5% as well. But obviously, we are seeing the demand pick up in Toronto. And here's the thing. End users are the ones outbidding investors and continuing to drive prices higher. And that's because the mindset is pretty different these days. We've heard stories of renters who are forced to move simply because they don't want to rent anymore. And the argument to move looks even better these days because the purchase price is actually more affordable than before. Families separate, families are created, and there's just many reasons why people need to buy a home. And for the past few months, there just wasn't enough inventory to go around. Another thing is, towards the end of last year, 5-year bond yields started to come down and people were locking in lower fixed rates closer to 4.5%. Now that the rate hold is close to expiring and bond yields are coming up again, that's another reason why we have been seeing more buying action lately, because people want to take advantage of the lower rates. And then it also looks like more cash buyers are picking up properties, and they obviously don't get impacted by higher rate hikes. So all of this is causing the end user pool to grow, but inventory is still very subdued, and that's what's been causing the unexpected price gains lately. This wasn't as obvious in the December and January data since there was limited activity in general, but we do see a lot more of this reflected in the more recent February data. Now, we do suspect that as more news outlets start to pick up on this, we're probably going to see more upward price movement in the short term until hopefully a bigger spring influx of inventory comes onto the market. Once that happens, we do expect prices to start to stabilize more with a better balance of supply and demand, plus pent-up demand getting flushed out. So, what does this mean for real estate investors? Honestly, it has been harder for us to find properties where the numbers can work, but we still stand by our fundamentals. We still insist on slightly positive cash flows to lower your risk, but also you need to keep in mind that maximizing total returns should be your ultimate goal as an investor. Basically, you might have to accept that the cap rate versus risk-free rate will be compressed in the meantime, but this isn't a permanent thing and will have the potential to improve if rents go up or interest rates come down. So chasing maximum cash flow shouldn't be your top priority. I mean, you can get much higher cap rates outside of core Toronto, but that's usually because appreciation is simply not the same. And if you look at total returns, Toronto still does make more sense, especially if you also factor in a better tenant pool in Toronto as well. Now, if you have a similar mindset about choosing Toronto, you would have to be a lot more selective with what you invest in. The key today is really to go to markets where end users don't, and that's always going to be properties that need bigger renovations. Just put yourself into the shoes of an end user buyer. If you're going from renting to buying, then you typically don't have a lot of capital, and you might end up having no choice but to buy a house that is all done up because they actually require less capital compared to one that needs bigger renovations. If you're upsizing, then it will be harder to figure out living arrangements while you're renovating, and that's why most here also opt for renovated homes. And even if you are an end user that's not in any of the above categories, you might still not want to deal with renovations, and all of these reasons are why investment properties that need a big deal of renovations make the most sense for us these days. So if you are thinking about learning more about these kinds of opportunities, we'd love to have a personalized discussion to help you hash out your options. Just reach out to us by heading to the link in the description below. We're a real estate sales brokerage that focuses on investing in houses and multifamily homes in Toronto, and here's how it's like to work with us. First, we'll do a discovery call with you so we get to know each other more and help you get your financing ready, and then we'll teach you how to analyze deals. Once you're set, our sales team will work with you to find the best opportunities on the market and eventually help you buy the best one for you. Houses typically need a bit of renovations, and we'll help you with a detailed scope of work and contractor connections. And then once you're ready to rent out the place, we also have leasing and property management services if you need it. So if you want to learn more about any of this, just head over to our website at the link down below. Again, don't forget to give this video a thumbs up and look for us on Facebook, Instagram, or LinkedIn if you want to hear from us more regularly. You can also head over here to check out our other videos. Thanks so much for watching, and see you in the next video.